Good morning.
Good morning. How are you today?
I'm good. How are you?
Good, good.
Trying to see about making sure I'm always doing something. I think this thing is recording, so let me behave.
Okay, we are live. Today is, what is today? September 10th?
Oh, yes, it is.
September 10th, 2024. How are you ladies doing today?
I'm great.
Doing well.
Good, good. So we are Ask the Experts with EXP Realty and Loan Factory. And let's see, we got any questions already queued up.
We do. Um, so the first question was what is a 2-1 buy down?
2-1 buy down is a program where traditionally the sellers or the buyers would be buying down the interest rate for the first 2 years. And then in the third year, it would go back up to where it would have normally been. So Rocket now has a program where they're paying a grant of 2 points. So they're paying the first 2 years and you don't have to pay it back. You just have to be registered with Rocket, and you could do that with me through Loan Factory, and they're going to give you a grant. So that could be up to $6,500. So it's not for every home. The home has to qualify. It's up to $350,000. And then the person has to be within that below that 80% median income. And that in this area is about $76,000. So if you make more than that, you don't qualify. If the house is more than 350, it doesn't qualify. But anyone that wants a house under 350 and their income is below 76,000, and of course, it depends on if you have a family of 4 or 5, that income can go up. So just check with me and see and I can show you how to find that area medium income for your area. And this is nationwide. So it's great. And what I have been telling some of my clients is that whatever that payment would be in the third year, still make it the first and second year if you can. That way you're reducing your principal interest payments over the long run, and you won't have a 30-year mortgage. Maybe you'll have just a 20-year mortgage.
So is the interest rate after the second year, is it fixed?
It's fixed for the second year, and then it's fixed for the third year. And of course, you can always refinance.
Gotcha. So that sounds good, especially being able to continue making that payment and then being able to pay your loan off faster. With the buying down the interest rate and the points, kind of explain what points are.
Points are interest. So, they're lenders. Lenders want money. It costs money to get money. And that's what it is. It's interest, but they call them points. So you're basically prepaying your interest rates.
Mm-hmm.
I remember when I first got my house, we paid, I think, 2 points just to get our rates lower. But, we're thinking, oh, it's a lower rate and we pay this money. We really didn't understand how money works and how all that works. So one of the things that my husband and I try to do is we want to educate people on how money works and how all of this plays plays in your financing, and then do comparisons. So don't just go with one lender and they give you your rates and your sheets and all that. Compare it with another one, because all lenders are not the same. And it may sound like a great deal, but then when you look at it in the long run, is it really a good deal? And so to some people, it could be like, okay, yeah, I don't have to pay this now. I'll pay it later. I'm gonna be making more money later. And then other people who are really money conscious, like, no, bottom line is I'm going to be paying more for this one, so I want this one. So it all
Mm-hmm.
depends. But you just got to know and be able to make those educated decisions.
So a question about the points. So how much money do you need to buy down? Can you buy down 1 point, half of a point, fourth of a point?
I haven't seen you can't buy all the points down because you can't have a 0 interest rate. So typically I've seen 2, 3, 4 points, and usually a quarter of a point is about $1,000, a rule of thumb. So if you've got extra money, you can do that. And then some people say, if you got extra money, don't give it to them as interest, give it to them as principal so that you're not paying as much interest in the long run. Does that make sense?
It does, but I guess it just depends on, like you said, the individual. Some people don't want to see the home that at that price, and some of them don't want to see the interest rate at that price.
Right. And
so
some
it-
people are real interest rate sensitive, like, I'm gonna buy when it gets to, 3% or 4%. And then some people are like, I don't care about the interest rate because I'm gonna pay it off sooner anyway. I just want to get in
Mhm.
the house and get in there. And if you think about it, you're paying 100% interest if you're renting. So
Yeah. And visiting a lot of new home communities, the negotiation is to like, okay, well, if you don't want to buy down your interest rate, the money that the lender is offering to buy down the interest rate can be applied towards paying down the actual price, like you said, that principal, which over time equates to less interest, even at the higher interest rate, right? So the interest is based on the principal. They can only charge the interest rate to the principal that is there. And so if you have less principal, then that means that that interest rate is being applied to a lower amount. And so just keeping those things in mind. But again, like we're saying, everybody's interest rate, everybody's situation is different. And what matters to you is what matters to you. But there is a opportunity for everyone. You just have to consult with a professional to understand what that looks like. Going into one of our next questions and talking about down payment, because we have a few clients that are having trouble saving for a down payment. A lot of people want a 0 down payment loan option. They want to save as much on the front end, right? Not having to come out of pocket for so much on the front end. And while that is possible, right, there are plenty of down payment assistance programs out there. You may or may not qualify, but they are available to you. And if it's a matter of having trouble saving, I actually created a chart working with my buyers to get them to see, right? To see like, okay, daily, how much can you save? Weekly, how much can you save? Monthly, how much can you save? Being able to set that goal of, hey, this is what I need to have for a down payment, and then working it backwards and saying, this is how much I can save each week out of my check in order to accomplish this goal in X amount of time, right? The other thing is there are programs such as the NACA program, such as the Freddie Mac Credit Smart program that allow you to go through homeowners counseling, and it pairs with education on credit, financial responsibilities in conjunction with home ownership. So what that actually looks like, breaking down what principal and interest are, a lot of the terms that you hear, but you may not understand. And so then it gives you an ability to figure out what's going to work best for you, right? Helping you to have that another measure of accountability, because we can tell you all the things to do. And we, meaning realtor, lender, we can tell you all the things to do and what your profile needs to look like in order to qualify for the home that you desire. But it's still going to be up to you to execute those things, right? And sometimes people just need a little additional help, a little more accountability to their goals, in order to maintain the discipline to be able to get into home ownership. And it's available. So you can sign up for the NACA program. A lot of people feel a way about NACA. I love it because it gives you the foundation that you need. It's an education program at its best. We talk about the loan part and the no down payment and helping you save and things like that, but essentially it is a home counseling program,
I love
right? That's
NACA
going
too.
to teach you the benefits.
Yeah, I love NACA too. I send a lot of my buyers there just to get that education and foundation. Now, they may not stick with it because the process takes a while, but
Mhm.
they've learned and they're like, okay, I've learned enough and now I'm ready. And then they go another route.
Okay.
I've had several people do that, but NACA, you can't beat that. No down payment, no minimum credit score, none of that stuff. But you still have to have some cash. A lot of people think when you have no down payment that that means no money. You still have to have inspection money. You got to have option fee, which is typically 1% of the sales price. So $200,000 house, you at least need $2,000. And then your option fee, which is the option to terminate, which could be $100. And then your inspection, those are running like $500. So we're up to $3,000 now.
Mhm.
And you haven't even moved. You haven't even got a truck. And
Our
it is,
utilities, transfer, it's a lot, it's a process that is easier said than done.
yes.
But it's
Is
not
this
impossible. That's the thing that we're saying. I think it's a great time to, if you're a buyer, to be in the market to look, because right now it is what we consider somewhat a buyer's market, meaning that the sellers are have been, since these last few months, have been making a contribution toward your closing cost. So that
Yes.
way, if you don't have as much, they're willing to do that, because it's just taking the homes a little longer to sell. So it's a great benefit. And, we don't ever know how
so
long it's gonna last, but while it's here, definitely, love to hear from someone.
absolutely, absolutely. And while we're talking about that, we have several resources in place to be able to assist you and walk you through the process. So, you mentioned like transferring utilities, right? Like we have a service that helps you bundle that all together. You they reach out to you and help you set up whatever it is you need, your internet, electricity, all of that. Those are benefits that we offer to our clients. Um, it's not an additional charge. It's available to you because we want to be there to assist you through the process. Yes, it is becoming a buyer's market where sellers are in a position where some people are paying two mortgages, some people need to move on from the home. Their home has been sitting on the market for a long time, and for no other reason. Like it's not a bad house; it's just simply the market. Buyers have not been flooding the market. And so, yeah, it's a very unique opportunity we have right now to be able to purchase. And so, if you've been on the fence, I highly suggest that you get off the fence and look at what your situation is, your profile, get with a lender, get pre approved, uh, see what you need to work on. Because you may be in a better position to buy than you think you are, but because you're not communicating and reaching out, you don't know. And so you're still sitting on the fence. When is the best time to buy? It's when you are ready. When you're ready to buy is always going to be the best time to. And so taking advantage of that. Vanda just went through the upfront costs of that was our next question was what's the difference between like upfront costs and then the closing cost, right? Vanda just went through what the upfront costs are. Now we're going to talk about the closing cost on the back end of the loan. Once you've You're going to the closing table. You're right there, ready to get that moving truck, right? And move into your new home. What are those last things that you have to bring to the table? And so just like Charissa was saying, a lot of sellers are offering to contribute to your closing costs. A lot of new home builders are offering to contribute to your closing costs as a buyer. And so you may have to come out with $0. You may have to come up with $5,000. The typical range and percentage for closing costs is 2 to 5% of the purchase price. Okay, 2 to 5% of the purchase price. But again, if you're getting those contributions from the seller or the builder, that can really assist you, but don't rely on that. Okay, because that's not a guarantee until you have a signed contract. It's all in black and white and in writing. It's not a guarantee. Okay. So don't get into the situation where you are signing up for something, going into the purchasing situation, feeling like, okay, I'm going to have a $0 down payment. I'm going to get the seller to contribute to all the closing costs. And then I only have to come up with my earnest money and my inspection. And I can do that. But all these other costs, this is the situation that I want. It may not be feasible that way. So don't rely on it. Know that it's there, it's available, it's an option, but don't be reliant on it. You want to set yourself up for the best possible situation and affordability in home ownership.
One of the things I want to mention before you go forward is when you talked about credit, there are a lot of companies out there that will help you qualify for a mortgage for free, looking at your credit report. If you register your loan with them and they say, okay, you don't qualify now, but this is what you need to do. It might take a couple of months to get you there, but this is what you need to do to qualify with us. It may not work for, Chase or Wells Fargo, but it may work with XYZ. So, but the person has to reach out and contact you and open their mouth and start talking about it.
I agree.
Absolutely.
And, you have to at least fill out an application because you want to know the specifics. When that happens, then you will know, the lender will know if you're really ready, because going online, putting your numbers in is an estimation of what it could be. And that a lot of times that's based on perfect credit, based on the amount that you have, less debt or no debt, and that you have money saved. That's why it's so important to start that process off with getting pre-approved. And the lender, and you and the lender will know your mortgage, your estimated mortgage payment, as well as your closing costs and how much of a down payment you will need. Because you come to the realtor asking those questions, we'll be like that, putting the information on a computer with a sliding range of assuming that they're all, that you fit into that category, and that's not the case.
Right, because once we pull that credit report and it's like, oh, you forgot about this one and you forgot about that one, and they just forget. Like, I make $100,000 a year, but yeah, you're in debt for $250,000, so the debt to income ratio won't work. But then we can suggest some things to do. Pay this off, pay this down, do that in a couple of months, then you'll qualify. Don't get that new truck that you really want.
Yeah, and you need some patience because it does take time. It's not like where you're going to go shop around, get a car, and you're going to walk out that day. This is a process. And there are lots of people involved in that process to get you to purchasing a home, whether it's a resale or if it's a new build. It's a process.
Absolutely. Absolutely. So just to go back, I wanted to break down the closing costs. So it is going to include the appraisal fee, title insurance. You do pay a prorated amount on the property taxes. for the home. Keep in mind when you do a new construction, a lot of times they have the property taxes set for just the land, not with the improvements or the house on the land. So always pay attention to that, and get that estimated with the improvement and not just the land itself, as well as HOA fees. So there's usually a transfer fee that the HOA charges. And then if that person has, if the seller has like any outstanding HOA, they would be responsible for that, but you may have to pay, as a buyer, a transfer fee, for the HOA. And then discount fees, which is those points that we were talking about, where you're buying down your loan on the interest rate, you would pay that at closing. Okay. So that just breaks down those fees. And when we're talking about purchasing and being able to, the affordability, coming to the table and getting, they're going to run your credit, the lender's going to run your credit report. The lender's going to check, verify your job. Be honest. Just be honest, right? As realtors, we're here to help you. We're here to put you in the best situation. As lenders, they're here to put you in the best possible situation. But if you're not honest about where you are, what you actually make in income, what your credit really looks like, what's really on your credit report. I know sometimes it can be scary to look at your credit report because you're like, "Ooh, I know this ain't gonna look good. I know I got this," and then it'll be the one thing that you don't know is on there, that one thing that went to collections, or the one thing, and because you were afraid to look. Don't be afraid to look. When you're trying to make a purchase of this magnitude, it's important to review your finances, review your income, review your credit, and truly know where you stand. Okay. So if ever there's a time to not be afraid, it's when you're purchasing a home. We understand it can be scary, but you got to do it. You got to do it so you can get real about your situation, and make sure that your lender, your realtor, is able to help you as best as they can. So help us help you.
Okay.
And a good source is Credit Karma, even though a lot of people say it's not as accurate as when we do the FICO score, because it only reports 2 of the credit bureaus. But they can also help you get to the score you want to get to. They can suggest things to do. Pay this loan down, pay this off, pay this on time. It's basically helping you to get your credit up. And if you wanted all 3 reports, it's a free one that you can get annually called Annual Credit Report. I think it's called freeannualcreditreport.com. You get that, and then you see everything on there that's, if anything is inaccurate, you can dispute that now. You can, if the name is different, get that taken off now, because a lender is going to ask you to do that during the loan process. Any name discrepancy, any address explanations, any of that stuff, they're going to ask for a letter of explanation. So it's easier to just have a clean credit report before you go to the lender than to have them have you write all these letters, because that's just tedious, time-consuming work. It's got to be done, but if you're 6 months out, go ahead and get that credit report now. If your name is spelled wrong, correct it, have them correct it correctly. The addresses, take that one off, put that one on, whatever it is, get that on there now.
And you said this is called freeannualcredit.com?
Report.
Okay.
Creditreport.com. You can download the app for Credit Karma, okay, and start tracking. You can also do disputes in Credit Karma, as well as sending letters. They will give you suggestions on improvement, like Vanda said. You can also download My FICO. It's an app where you can track your FICO score as well. So between those resources, you should be in the know. and have good suggestions on how to be able to improve your credit score through those. But again, you got to look at it. You got to download the app. You got to check it out. You got to go on the website, doing it annually, and just set it
I don't
timely.
want to see
Check your
it.
credit report every January. What'd you say, Vanda?
They say, I don't want to see it. I don't want to look. I know it's bad. I don't want to know.
If you don't know what it is and you know it's bad, how does it get good if you're not looking at it?
What's that called? Put your head in the sand. Is that what they call it?
Yeah.
Your head in
We
the
don't need
sand.
your head in the sand. We need you in the know.
Yeah, exactly. All
It's gonna
right,
be
ladies,
all right.
we have one more question. And the question was, why am I paying a broker fee, or why should I? On the buyer side, why should I pay a broker fee?
The broker fee, the buyer broker fee that is being paid because the seller or actually owner of the other home is not paying fees. And that's important to know up front when we have a consultation meeting, when we are meeting with a potential buyer, that we bring this up, because this is a huge change, because normally you're accustomed, I shouldn't be saying that word, but you're accustomed to having someone else pay it. And with these new changes that have come down through the National Association of Realtors, it is now your responsibility to pay your buyer broker, because the seller is paying their broker. And so we don't want to mix that anymore. And we just want to be transparent about that, because that is an expense. Is why we talk about that up front, because sometimes, what does that look like with your funds? Because so we'll know how to approach that if you don't have as much, so that the realtor, we can talk about this with the other agent and see if there's any way that, they can make some contribution. Because like you said, Janila said, you must come to the table with some money. Zero down does not mean nothing out of pocket, no skin in the game. Yeah, so we, just want to make sure that the buyers do understand that this is the biggest change, is that you will need to come and pay the broker, the buyer broker. And then you're asking, well, what is that? Well, you're looking, if you've been approved for 3,000, just whatever you have agreed upon, you multiply that by the home, and it will let you know upfront what that is, so that there are no surprises.
The realtors
Exactly.
are professionals and they have to get paid for their services. You don't go to the dentist and say, why do I have to pay you? I mean, you can take your tooth out yourself if you want to, but is it advisable?
No.
Not at all.
So you
Not
go
at
to a
all.
professional and then you pay the fee that they tell you. So you can buy a house without a realtor. Is it advisable? No.
No.
But so you pay a fee for that service.
And that's the thing, is conveying the value of what we offer. Many people say realtor and they're like, oh yeah, just open a door for me. It's so much more than that. There's somebody filling out paperwork on your behalf, right? Listening to you and your desires and your wants, understanding what you can afford and not afford, and advising you, right? We are, negotiating on your behalf to get you the best possible deal or opportunity. We're researchers, so we're researching opportunities for you to be able to put you in the best possible situation. As far as the down payment assistance and the grants and the programs that you may qualify for based on your profile, we're connecting you oftentimes to people in the industry, whether it's inspectors, lenders, title companies, people that we work with. We're connecting you to those people and resources, real estate attorneys, um, bankruptcy attorneys, depending on your situation. We're connecting you to those people, and just being a resource. We try to have at least 3 to refer you to so you can choose from. Um, like we mentioned, we have, utility connection services, being able to provide that service for you, being able to, just constantly in communication and contact with the seller on your behalf. So there are a lot of things that we do that, yeah, probably you could do it yourself, but it's going to take you longer. It's going to be harder, and you don't know what you don't know, right? You
Right.
don't know if you've asked all the questions that you needed to ask of the builder or the seller or their agent, right? And then that seller has their own agent working for them, even if you're going owner to owner, right? And you're working with the seller directly, sometimes that can be, they've got their own, did they disclose everything about the house? What kind of communications are you having? So sometimes you don't know what you don't know. And it's really beneficial to have someone on your team, on your side, that again is working on your behalf. And what that means is that we are receiving compensation because you hired us to work for you and with you to close the deal.
Right. One of those examples of what you don't know is the mud disclosure. That process changed recently. And so the average person doesn't know where to go and get the mud disclosure. And if that's not signed off and presented when you give the contract, the buyer can walk away at any time, even after the option period, and still get a full refund of their earnest money. Like the day before closing, they can, just walk away because they never got that disclosure.
Mm-hmm.
Those are
Mm-hmm.
some of the small things that the average person doesn't know. A lot of realtors don't know that. So a good realtor does, but a lot of them don't, because if they're part-time, they just, don't deal with that much. So
Yes. And we know this, right?
you know,
There are deadlines in place. Like you only have so many days to turn in that earnest money. You only have so many days for an option period. How long did you stipulate your option period was? Are you about to meet that? Do you need an amendment to extend it? All of those things are very, very relevant to the conversations that are being had on your behalf. And yes, with a good realtor, you kind of go along with the process, but as you should be asking questions. Like it's going to be your home, right? At the end of the day, when the deal is closed, right? We're going home to our homes where we live, and you're going to be a home owner, right? Which means you have to take ownership of what is going on with the process and with the home. And so we're here to help you, but that's very important.
yep. Shameless plug, this house is for sale. It's $499 on Piping Rock with the salt water.
It's a stunning home.
It is very nice.
Stunning home.
I'll be doing an open house there tomorrow. The AC went out, so it's getting replaced tomorrow. So it's going to have a new AC unit. So
Okay.
good selling point.
Perfect.
The pool,
Yes.
and the pool looks great. It's always great to have a swimming pool here in Houston, Texas
Yeah.
during
And
during the year, because let me tell you, it's just a few days of coolness.
And it's
Majority of
heated.
those
So
days you're in that pool.
when it does cool down here, it's heated. So you can get in there and have a little, warm
Okay.
December or January.
yes, yes. I love it. I love it. So yeah, what other listings do you have, Vanda?
This is the only one. The other two are pending.
Yeah, congratulations.
Thank you.
Congratulations. Good stuff. Good stuff. All right. Charissa, what do you have?
I have one buyer under contract. And I've just received another referral for a buyer, so I'll be working with them to see where they are in the process. They're ready to move, so we'll see about that. And then a couple of people that have been referred to me for rentals. So
Perfect. So if you've got buyers, I'm in the same position as Charissa. We've got buyers and we've got renters that are looking to rent and to buy. So if you are a builder, please reach out. And if you are a representing a seller, an agent representing a seller, and you've got a good property that you need to move, please reach out to us. We would love to partner with you. Develop a relationship and help you get your home sold and get our buyers into a place that they can call home. We're happy to assist. What areas are your buyers looking in, Charissa?
I have a buyer that let me see here. I have a buyer that's looking in Spring.
Okay.
Not a buyer, that's the renter in Spring. And then I have a buyer and maybe in Tomball, and the renter is there in Rocheron.
Okay, perfect. And then mine are in, I have a renter for Cypress, a renter for Katy, and then a buyer for Katy or Hockley. Yes.
I got a Hockley home coming up for rent. 4-bedroom, 1-story
Okay.
at the end of this month.
Okay.
Okay. Good to know. Perfect.
All right, ladies.
Okay, then. Y'all have a productive
Alrighty.
day and be safe.
You guys do the same. Until next month, ask the
Yes.
experts with EXP Realty.
Okay.
Thank you so
All
much.
right.
We'll see
Bye-bye.
you.
Bye-bye.
Bye.